China and the European Union highlight economic cooperation and trade ties at the 6th EU-China High-Level Economic and Trade Dialogue in Brussels. Hello, I'm Arnold Naidu in Washington, D.C., and this is The Heat. From one belt, one road to China's push for market economy status, China and the European Union touched on a wide range of economic and trade areas at the recent EU-China High-Level Economic and Trade Dialogue. For a recap of the meeting, CCTV's Elena Casas joins us from Brussels right now. And Elena, this was the European Union and China's 6th High-Level Economic and Trade Dialogue. What was accomplished this time?
Well, the number one topic on the agenda was the steel industry and what the European Union describes as the overcapacity in China's steel industry. Essentially, many in Europe believe that China is flooding Europe with cheap steel, and as a result, certainly steel industry unions and some European countries believe that their domestic steel industry is being pushed out of business because cheap Chinese product is pushing the price down so far. Now, just a couple of weeks ago, the EU introduced new tariffs on Chinese steel on up to 73% on some products. As a point of comparison, though, the United States has tariffs of over 200% on some Chinese steel products. So 73% perhaps isn't quite as high as it sounds, but it is a high tariff that China doesn't want to see. China is known as market economy status, which would make it very difficult under World Trade Organization rules for the European Union to impose such high tariffs on Chinese steel. The problem being that many countries in the European Union don't want to be forced to consider China a market economy. So that was really one of the main topics on the table at this discussion. Some European Union countries believe that China gives too much state aid to certain industries, and as a result it's not really a level playing field for European firms. And so they wanted some assurance from their Chinese counterparts that European firms that trade in China can do so on more of a level playing field, and also that China would do something to bring under control this specific problem of overcapacity in the steel industry, so there wouldn't be quite so much Chinese steel being sold, what they feel at least is too cheaply, on the European market. And now the EU says they did make progress on all of those fronts, both on the front of state aid, of talking to China about making a more level playing field for European firms, and on this problem specifically of overcapacity in the steel industry. China has promised to try and tackle that in a way that won't involve quite so much cheap product being offloaded into the European market.
Now, the European Union as a whole is China's largest trading partner. It imports almost $1 billion worth of Chinese goods every day. Why is this relationship so important to both parties?
Well, China is indeed the EU's largest trading partner, and the amount of goods involved means that China and the EU are essential to one another. Certainly for European Union exporters, China is becoming a very new and very exciting market for some products. One of the key topics on the table at this meeting was of what's called geographical indication. That's the ability of European producers to sell cheeses like Parmesan and wines like Champagne under those internationally recognized labels. And it wants the Chinese to agree that those products being imported will also be recognized as having some special status, as they are in Europe, in order to enable producers to get the right status and as a result a good price for its products. And so they can't be undercut by cheeses made in the US or indeed in China itself and sold under the name of Parmesan. So that's just one example of a way in which China is becoming a new and increasingly dynamic and exciting market for European producers in many fields, and the EU knows that it needs to create a strong foundation on that trade, for that trade to build on.
Thanks, Elena. That's CCTV's Elena Casas reporting from Brussels. Joining us now from London, Ke Jin is a professor at the London School of Economics, specializing in China's economy. From Brussels, Shada Islam is the Director of Europe and Geopolitics at Friends of Europe. And with us in the studio, Andrew Small is a Senior Transatlantic Fellow with the Asia Program at the German Marshall Fund. Thanks to all of you for joining us. Ke, when we talk about China's trade and economic relationship with the rest of the world, the conversation inevitably goes to China's economic slowdown. Growth is expected to be just under 7% this year. What kind of impact is that going to have specifically on the relationship with the EU?
Well, I think that part of China's growth slowdown is that exports have slowed down partly because the world is slowing down. So we need to think about, you know, the macro picture as a whole, as China is still a very export-dependent economy. But it is true that because of the transition of the economic structure, the demand for certain kind of commodities will be slowing down, as it's going to focus a lot less on manufacturing, which actually is part of the reason why there's an oversupply of, you know, for instance, steel industry. But still, there is urbanization. Urbanization is only halfway. We still need to build a lot of infrastructure. We've heard and we've seen that infrastructure investment is a priority for China at the moment. So that would also increase some of the demand for these commodities, where it has fallen off slightly because of the recent temporary business cycle kind of recession. I think that would be picked up in the medium term. So I wouldn't be so fast as to conclude that China's impact on trade and relationship with the EU is going to be strained, because I think these projects going forward will still very much you know, enhance the kind of demands for bilateral trade. That said, I think that you know, the economic situation in Europe is also not doing so well. So there will be increasing still tension, because protectionism tends to be the solution when economies are not doing so well. So this is likely going to bring about some strains. But you know, the point is that there will be more potential areas of cooperations in terms of trade going forward.
Right, and Shada, when we look at the specific relationship between the EU and China, that meeting that took place in Brussels, the China-EU dialogue, one of the big themes was promoting sustainable and balanced growth. What does that mean for these two groups?
It's very, very important, Anand. But let me just first respond to what was said earlier about EU-China trade relations. They are vibrant and dynamic at the moment. There are two issues that cast a shadow over this. First of all, it's the market economy status debate. As you know, the European Union is still undecided about how to deal with China's demands. It be taken off the list of state-dominated economy. That is casting a dark shadow over this high-level economic dialogue. And the second point, of course, is Brexit. I mean, you know, China and the EU are still, I think, reflecting on how Brexit is going to impact on their trade relationship. As regards your question on sustainable development, I think this is an agenda, in contrast to the trade agenda, which is at the moment under strain and tension. This is a very constructive agenda. This is an area where the EU and China can work together. Agenda 2030, Sustainable Development Goals, whether it's to do with climate change, urbanization, all of these issues bring the European Union and China together. So you've got two strands at the moment. You've got tensions over trade, and you've got this very constructive, broader agenda that's being developed by the two sides.
Right, two important issues you mentioned there, market economy status and Brexit. I want to get to them in more detail in just a moment. But Andrew, first, as we heard there, the EU is China's largest trading partner, and China is the EU's second largest trading partner. How big is China for the EU?
This is going to continue to be an enormous trade relationship going forward. The trajectory continues to expand. As Shada mentioned, though, the scale of this relationship does also mean that the scale of the challenges are also very large on some of these counts at the moment. So you on the trade side, you do have this massive influx in certain specific sectors. Steel has been the most sensitive, but it's true for others too, that mean that if other countries had the levels of overcapacity that China has, it wouldn't have the level of sensitivity that it does in China's case, because the sheer scale of this at the moment is becoming a huge challenge for the EU. The other big piece of the relationship that's expanding, albeit from a low base, is Chinese investment into Europe too. The trade relationship has been the main driver of the economic relationship between the two sides. But you now see Chinese investment into Europe expanding at as high a rate as a third year on year, and so that's now the other major piece for the EU. But this also has some very significant sensitivities, as we've just seen with in Germany with the review of one of the takeovers of the semiconductor manufacturer. You've seen that in the UK as well. So again, there is a large scale in terms of the new influx of Chinese investment that's coming online, but some real sensitivities around specific sectors and security and some of these other aspects.
Right, Keyu, China's big outreach to the world in terms of trade is the very ambitious One Belt, One Road project. There appears to be little enthusiasm for that project in Europe, and one wonders why there is that kind of reticence from Europe. One would think that this would provide enormous potential, enormous opportunities for growth in the trade relationship between China and Europe.
I think part of the reason is that there's slight confusion, probably rightly so, for how Europe can benefit. Europe being, the Western Europe part, could benefit from the entire project. And the answer is that clearly is that there is. It's just that I think from a purely logistical point of view, the whole project, as ambitious as it is, has not, fully produced a very systematic approach to the strategy, and where the countries can, willingly participate. I mean, I've had conversations with, officials from the British government expressing great enthusiasm about participating in this big and momentous project, but not really knowing where, how to begin. And to be completely honest, I personally think that while some of the projects are going ahead, there is a lack of a systematic platform, if you will, where many agents, many segments of the project can gather together, going from the investment side to the logistics to the construction companies to hold that all together. Because I think a lot of these Chinese companies have the mandate to undertake certain kind of projects, but not knowing where to begin. I think this is the same attitude with the Europeans, where there is potential enthusiasm if they know where to direct it to. So that's an ongoing challenge for the project as a whole.
Shada, there was another high-level meeting between China and the European Union earlier this year, which focused in part on the EU-China connectivity platform. What exactly is that platform? Where does it stand right now, and how does it evolve?
Well,
Go ahead.
Right, that's linked very much to what we just heard from Keyu. There are two narratives here in Brussels, and I think in other EU capitals as well, when it comes to dealing with Chinese investments and the Belt and Road Initiative. The one positive narrative is that all investments are welcome. Belt and Road is a very interesting initiative. It's a trans-connectivity, trans-Eurasian connectivity initiative. The European Union wants to be part of it, and that is being discussed also in this connectivity platform that Anand, you just talked about. The second narrative is the one that Keyu alluded to, and there's curiosity, but also fear and concern. As Andrew said, when these Chinese investments are coming in at the moment, and there is a big surge in Chinese investments starting from a low base, there is concern that somehow European assets, crucial assets in Europe, industrial plants, manufacturing plants, technology organizations, companies, etc., are going to be taken over by the Chinese. And that, I think, is a reflection of how vulnerable and fragile Europe sees itself at the moment. It cannot deal with this on a say, a rational basis. The second narrative is also Belt and Road Initiative, connectivity, yes, very good, but will European firms benefit? Or is this just going to be for Chinese business? Is it just going to be a vehicle for China to expand its global, to use its oversupplies at the moment, cement, iron and steel, etc. So while the Europeans are very interested, they have their own investment plans, the so-called Juncker plan, and they want Chinese investments into it. As always, when something new happens, when you're in a period of transition, there is concern, but also curiosity curiosity and interest. And I think it is the challenge for China, for Beijing at the moment, to explain things in a clearer fashion, to be more transparent. And Europeans want details. The vision is good, it's constructive, but they want details. What projects? What will be the part of European firms? What will be the procurement rules? How transparent? Will there be discrimination? All of these questions are on this connectivity platform, Anand, that you talked about. They're being discussed there. So I see a lot of potential for synergies, for cooperation, but it's not going to happen overnight. It'll take time to build trust and confidence.
Right, and Andrew, looking at Chinese investment in Europe, Chinese companies going on a buying spree in Europe, there's been some concern about the transfer of key technologies, something that you mentioned earlier on. Some have even suggested blocking investment in what they've termed sensitive areas. That happens to some extent here in the United States. How will it play out in Europe?
Well, in the US, of course, you have the CFIUS process, which operates at a national level that can block some of these investments on national security grounds. In the EU, you don't have an EU-level process of the same sort, so it's done at a nation-state level. And a number of EU member states have similar processes to CFIUS. You're already, I think, seeing in certain sectors efforts to try, as the level of Chinese investment expands, to put in some slightly more robust processes there, and even some degree of revisiting of whether there should be some kind of structure at an EU level, not necessarily legally to block the investments, but at least to review the Chinese investments more effectively. Now, there are very different responses to this new influx of Chinese investment on a state-by-state basis. The UK, for instance, has been notably welcoming to Chinese investment, as it is to a lot of overseas investment, and actually some of the largest packages of investment have been going into the UK in the last period of time. But you're having discussions that have started to open up, particularly in Germany, about what some of these investments amount to for the future of how the European economy works. Some of the earlier investments that were going into, distressed companies like Volvo, say, in Sweden, were seen as relatively beneficial. The question is, if Chinese companies are stepping in to take what are seen as the sort of crown jewels of the next phase of Europe's economic development, semiconductors, robotics, some of these more advanced technologies in Germany, for instance, then you're likely to see a degree of resistance, not necessarily just on security grounds, but also in terms of more broader, longer-term questions about industrial strategy. And that goes, these are integrated issues, actually, the investment question, the trade question, because I think there's still a sense that if there is a degree of reciprocity, a word that's starting to recur more often in EU debates, in terms of market access, and in terms of the benefits that can accrue from European companies gaining benefits from China's growing market, then there may be a little bit more willingness to be open to these things. But
okay, let me get a response very quickly from Ke Yu-jin on this. Ke Yu, how would China respond to what may be obstacles placed in the way of its investments?
Well, this is not a first time. I think China's has been met with a great deal of resistance ever since it's diversified a bit away from U.S. treasuries to different degrees. And for instance, in this country, the UK has welcomed China's investment more than other countries such as France. How do they respond? They're on a learning curve, in my opinion. There's certain things, certain sectors that are potentially sensitive, but also international best practice and standards, and meeting them along the way is part of the learning process. So I think as there is more, there will be more trust towards Chinese investment and their intent, and I think this is where the miscommunication often lies. I do believe that a lot of the Chinese investment is about economic returns and economic strategies, because there is a huge amount of saving that cannot be invested domestically, that needs to be deployed in the rest of the world. And for instance, the Chinese were asked to buy up the Greek debt at a moment when they needed China the most. But when they don't need China, they will be kind of resisting their investment. So there are a lot of political issues involved in this. But the truth is, the world, some parts of the world is in need of liquidity, and in the sense, long-term investment, which the Chinese is able to do, especially in infrastructure. So I think that there's a lot of miscommunication between the parties, but on the Chinese side, they need to improve international best practice and transparency, and be much more clear about the intent of their investment.
Okay, we're going to take a break right now. Coming up, will the European Union grant China market economy status this year? Our panel will weigh in on that and more. All that coming up. You're watching The Heat. Welcome back. We're talking about the economic cooperation between China and the European Union. The European Union is China's largest trading partner, and China is the EU's second largest. That's more than $1 billion every day. Still with us to discuss the China-EU economic relationship, Ke Yu-jin is a professor at the London School of Economics. Shada Islam is with the Friends of Europe, and Andrew Small is with the German Marshall Fund. Shada, let me start with you this time, something that you mentioned at the beginning of the show, and that is China's request to the EU to grant it market economy status. The WTO agreement says that status should be granted by December 2016. That's next month, but that doesn't seem likely. The European Parliament has already voted against it. The EU has raised concerns with China. What are the European concerns? And to some extent, has this become politicized, over-politicized?
It's extremely politicized, extremely political. It relates to what we heard just earlier about European Union demands for reciprocity, equally open access to Chinese markets, equally open access to procurement in China. So it's all about reciprocity. The Europeans say, look, our markets are open, your exports, your investments are coming in. We need the same degree, level of access to your markets. So that's a very important issue. The other one is global steel oversupply. Now, the Chinese argue, I think rightly, that there was fiscal stimulus in 2008, 2009 that led to steel production going up in China, and now we're paying the price for that. It's also a global problem. It's not just a Chinese problem. But here in Brussels, we've seen people out in the streets, steel workers, steel plants are closing in many parts of Europe, including in the UK. So this has become extremely political. And on top of that, as you know, there's been this huge discussion, a cliffhanger, about whether the Canadian free trade deal with the EU will go through. So it's all very political. Trade, globalization, investments, all of this is mixed into quite a poisonous anti-globalization narrative that is being developed here. So when China comes and rightly says market economy status under WTO rules should be given to us by December, the European Union initially said, yes, of course. But then it became very political, including in the European Parliament, as I said, demonstrations in the streets. So I think what we're moving towards now is a kind of a fudge, a political fudge, whereby China will be taken off the list of state-owned market, state-owned economies, if you like. So there will be no list anymore. But at the same time, the European Union will beef up its trade defense measures so that it'll be easier to impose anti-dumping fines, because this is all about Chinese allegations that China sells its goods on European markets at below cost prices. So I think it's going to be a fudge. I think China will probably not be very happy with it. But given the current anti-globalization narrative, explosive, poisonous narrative here in Europe, I don't think we can get beyond that for the moment.
Andrew, the Europeans can say to the Chinese, look, our markets are open to you, we expect the same from you as well. But there is nationalist sentiment that's sweeping across Europe right now, and that is accompanied by calls for protectionism, for trade protectionism. Will that affect that relationship in some way?
Well, I mean, first of all, you have this technical question, which is market economy status and the specific legal issues around what the EU is required to provide China on this count. The attempt at the moment, I think, is to try to separate out some of these political and broader economic questions from the technical process of how this proceeds at the WTO. I mean, the argument, if you go back to the people people who negotiated this, China's WTO accession in the first place, was we will grant you market economy status in the fullness of time at the end of this year, but we expect that over that period of time you will have evolved into something that resembles a market economy. And I think a lot of the negotiators on the Chinese side fully expected that China would look something more like a market economy by this juncture. So you now have this collision between the legal requirement probably to move on this shift of status that will reduce the European capacity to extend trade protection measures in various of these extremely sensitive sectors at the moment, because even more sensitive than it would have been a few years ago because of the overcapacity issue, and then this broader issue that Shada is talking about, which is trade at the moment is substantially more sensitive in general, not just specifically with China, and this means that even with close partners, even with traditional partners like the United States, where it's a particularly toxic issue at the moment as well in Europe, the Canadian deal, it means that across the board there are pressures in Europe to behave differently and recalibrate their approach on trade. So China is seeing some of the negative repercussions of that, but then there are some very China-specific factors that are in play with market economy status and with the overcapacity issue.
All right, Keryu, we are rapidly running out of time, but I have to get this issue in, and that is Brexit. How will the loss of the EU's second largest economy impact EU-China relations?
Well, I know that we're short on time, but just one thing about the previous discussion, which I think is important, is that we need to put this all in context, which is how important is the steel industry per se. I can think about a few different other countries, a few different industries that have the same problem. However, what we know from research is that when economies are doing badly, that is when anti-dumping activities, protectionism, especially against China, heightens the most. So I think all this discussion needs to be put in the context of particular global economic problems as a whole, not as independent sources of problems in and of themselves. And also in terms of market economy status, we are also calling out, this is also by the IMF and a lot of governments, for more intervention by the government, including capital controls, including macroprudential policies. The state intervention is actually warranted. So I find it very ironic and also very interesting that China in particular is put out in the center of debate while all the rest of the world is doing something else. But on Brexit, which is a topic that I cannot avoid at any point in day here, but I think that there is an opportunity in terms of fostering relationship between UK and China. From what I understand and what I believe is that this act itself has not hampered the relationship between China and the UK, and potentially is an opportunity for greater cooperation. But I do think that the financial services industry, I am concerned about that, because if depending on how the negotiations go, if certain kind of negotiations fail, for instance the settlement of euros in London, then I can foresee many financial companies moving out of London, and that would be quite disastrous.
Okay, and that's where we have to end it. Keryu Jin, Shada Islam, Andrew Small, thanks to all of you for joining us. That's all we have time for, but the conversation continues online. Chat with us about this or any other show on Twitter. We're at CCTV_America. We also use Facebook. Find us at facebook.com/CCTV. I'm Anand Naidu in Washington, D.C. Thanks for being with us.